Certainly over the last few weeks, there's been huge press profile of, financial turmoil, unemployment looming, and all these headlines mean that we as consumers are actually, seriously considering our own financial position, how strong that might be, and that is having a knock-on effect on how much we're actually prepared to spend in the retail market. What it means for the retail sector particularly is that demand for their goods and services is very volatile at the moment. And certainly over the last couple of weeks, a number of my clients have experienced a significant fall off in the level of sales. I think there is a big divergence between what's happening in the food sector and in the non-food sector. If we look at the food sector, then actually there has been quite a bit of inflation in food. Food is a fairly non-discretionary purchase. So actually what that means, although some of us might actually be trading down into more value and discounted lines, the amount that we're spending in food isn't actually changing that significantly. If we look at non-food though, it's the big ticket purchases, discretionary purchases. Those are the areas of retail that are being hit most significantly in the immediate term. The fundamentals of retail are almost as they always have been. The winners are the retailers who are actually the businesses who are able to anticipate what it is that their customers actually want and to be really speedy and fleet of foot in responding, particularly in the current environment. The response of particular clients is very varied and obviously changes on a case-by-case basis, but what I've seen a lot of them doing is re-looking at their projections, particularly looking at their cash position, because they're going to need to manage their working capital very carefully, particularly in the lead up to Christmas, because it's now that actually they need most of their cash before the Christmas trading and the cash actually starts to come in. So they've been looking at those projections, doing some scenario and downside planning to actually work out what plan B and plan C might actually look like if sales are lower than they are predicting. I think there is no doubt that there is an issue out there in that many of the management teams in a lot of UK businesses, retail is no exception, they've not seen a situation similar to the one that we're in at the moment. And therefore it will actually take them time to realise the severity and the significance of some of the challenges that they're facing. I think certainly the first thing that they should be looking at is what does their cash and working capital position look like? What do those forecasts actually look like? And how much headroom they've got on their existing facilities that they have available to them. But the other angle is about what's happening down their supply chain. So often a problem in a retail business can be traced back to issues within their supplier base. So understanding how those suppliers are managing themselves in the current environment is also going to be important. I think it's possible that we will see consolidation, but not in a sort of traditional M&A sense. I think the ability of the market to actually do deals is significantly restricted at the moment because of the availability of funding to actually finance those transactions. But there's no doubt that there will be more failures, if you like, within the context of the sector. So other retailers who are perhaps in a stronger position may be able to actually take advantage of what happens going forward.